Good morning, everyone. It is 10:02, and I think we're all extremely busy, so I think we should begin. Today, we will be focused on financing, and the title of our presentation webinar is The Art of Leverage, Using Art and Jewelry as Powerful Financial Tools. So I thought, since we have some old friends and new friends on this webinar, we would give everyone a quick insight into the merger of our two great companies. Paul Mall is pleased to announce, if you are not already familiar with this news, that we have joined the Fine Art Group. We're extremely excited about this merger. What this merger actually allows and permits is for us to be a global firm to cover all of the areas of management of our clients' art and collections. Elizabeth, go to the next slide, please. So our new 5 core services as a joined merged company are the following. As always, appraisals is the foundation of every decision our clients make about their collections. We still have a very strong appraisals department in the United States, and now we have increased expertise globally. So we, as you know, from an appraisals perspective, in addition to insurance valuations, we focus very heavily on issues around tax, fractional ownership, rental leaseback, estate planning. In addition to appraisals, we have a strong advisory team, both globally in Europe and the United States. Our advisory team is run by Morgan Long and Roxanne Cohen in the United States. We have a very strong agency division, and basically what we do in agency is we represent our clients as independent advocates for the sale of their collections. Today, we will be talking specifically about our finance division. The CEO is Freya Stewart, who I will introduce in one moment. And then last, but certainly not least, is our investment platform and services. As many of you know, if you are at all involved in art as an investment, Philip Hoffman, our CEO, is kind of one of the father figures in art fund management. And we continue to work heavily in that area. Today, as we look at the issues around leveraging art and jewelry, we have 2 terrific speakers. We have Freya Stewart, who is the CEO of the Fine Art Group, specifically the financing division. And we have Colleen Boyle, our National Sales Director for the Fine Art Group, the Americas. Can you please go to the next one, Elizabeth? Freya, over to you, and tell us a little bit, what exactly is art finance?
Thank you very much, Anita, and welcome again to all of our guests today. So art finance is quite simply providing finance using art as collateral or jewelry. So to take a really simple example, let's say we have a $10 million Picasso. We will lend $5 million against that Picasso for a relatively short term, so typically 1 to 2 years to start with. So art finance, as I said, is in the case that we, as we operate, it is real asset lending. So we underwrite the art asset only, and we lend money against that. So it's a very simple, straightforward form of financing using our clients' high value paintings and releasing some capital. Clients can do whatever they want with that capital, providing it's legal, and we'll come on to some more examples of what people use this for later. But just very broadly, there are 3 types of loans that we service to our clients. One is a term loan, which is a very straightforward loan. The example I gave with a Picasso there, for example, a 2-year term loan, and the client repays the loan at maturity, and they pay us interest quarterly throughout the term of the loan. Purchase financing is something we're seeing a lot more of. Perhaps if we could just pop back the slide, that would be great. The purchase financing is simply where clients are looking to buy a painting with a loan from us. So great example recently, a client's art advisor found them a fantastic Basquiat for about $7 million. We provided $3.5 million of that purchase price, and we paid it direct to the buyer to support the acquisition of that painting, and the client then paid the balance. And that was a great deal for the client, because within 12 months, the client had sold that Basquiat for $10 million. So that's a great example of purchase financing. The third type of financing is what we call consignment advance lending. This is where clients are looking for some immediate liquidity whilst executing a well-considered and well-executed sales strategy for their collection or their painting. So instead of perhaps a fire sale, or at least a sale that is perhaps not the optimal sales strategy, we can provide some financing, about 50% of the expected proceeds of sale, to the client, to give them that breathing room. And of course, high value paintings, they aren't the most liquid paintings in the world often. You need time to execute a good sales strategy. So that's the other type of financing we provide. Next slide, please. We thought it'd be helpful just to touch on the difference of the two fundamental different types of lenders in this space. We at the Fine Art Group are a specialist art secured lender. We are, as I said, a real asset lender, meaning we as an art group, and clearly art is our business, it's our expertise, we can assess the value of art and lend solely against the art. So we don't need to, I should say, we're able to take that risk. This is clearly a very unique risk and a very unique asset to finance, but we have incredible competency within our business to do this. Banks, of course, generally have a very different approach. They are experts in credit in many, many different forms, but they're not generally art experts. So we provide a slightly different approach to clients. We work with banks very frequently. Banks are our partners in many aspects of our business. And obviously, generally, when a bank is lending to a client, where they may be taking into consideration some of the client's assets, their art assets, they're really looking on a more portfolio basis rather than a real asset, a very real asset structured loan. So that's the fundamental difference between us and banks. But as I said, we do work with banks a lot. So I'm sure we've got lots of bankers on the line here, and we would love to do more business with you, where we can provide a type of financing to your clients where perhaps your bank isn't able to provide exactly this quite niche art finance product to your clients. I'll hand over to Colleen.
So Freya, before we start talking about the commercial terms, a question did come in from one of the attendees. They wanted to understand whether the Fine Art Group takes possession of the art and jewelry, or what does that structure look like from the standpoint of the collateral? Can you just expand a little bit on that process?
Yes, so we do typically take possession of the collateral, the paintings, the jewelry, in a specialist warehouse in the US, in Europe, in Asia. And the reason for that, even though, of course, I know most of you will be very familiar with the UCC and the capability that gives lenders, at least in theory, to not have possession, actually is a real asset lender where you have no security on anything else. We do no covenant testing. We have no financial underwriting of any kind, which is very advantageous to our clients in lots of ways. But the counter to that is that we do need to have that security of the painting to make sure that, in the worst case, we don't have any problems enforcing the loan because we have nothing else to fall back on. So as is customary, even in the US, for real asset lenders in this space, we do take possession. The exception to that is lending where we have collateral in museums. So for example, at the Met or the San Fran Museum, we've had lots of collateral at some major institutions in the US.
Great, thank you so much for clarification, Freya.
Yeah, I have one question, Freya, because it relates to Colleen's question. So for jewelry, many of our clients already vault their jewelry. Is the assumption that if you have a bespoke piece of jewelry, a yellow diamond or a single diamond or whatever the case may be at a certain value threshold, would then that be moved from one vault to another?
It can often stay where it is. Yeah. So, you know, a painting, for example, jewelry is easier to move in some ways, but you know, big collections and paintings, that can be expensive, time consuming, and sometimes just unnecessary. So it's sometimes as simple as a ledger transfer. I would say the majority of our clients actually have at least a significant proportion of their collection in storage, and they tend to use that as their collateral. So it isn't a case of kind of stripping the client's house. It is frequently in storage anyway. And as you say, we do a ledger transfer. So it's very simple.
Thank you.
Yeah. So let's talk a little bit about just the commercial terms. So for these types of loans, as Freya mentioned, they're real asset types of loans. And what the Fine Art Group offers is we offer a term loan for a variety of different reasons, as Freya mentioned earlier, and she's going to give some more specific examples as we go through the presentation. Standard is 50% loan to value, usually based on low auction estimates or fair market value. And the term tends to be short term, 1 to 2 years is usually the term. So it's clients who are looking for short-term liquidity needs, who might not want to go through a full underwriting process through the financial institutions, or they might already be leveraged to the point where the financial institution doesn't feel comfortable. And that's where the Fine Art Group can really fulfill the need for the client for liquidity. The loans tend to range from $1 million to $200 million, and the interest rate's based on LIBOR. Interest rates are still very, very desirable, hence which has enhanced this demand for finance. We're still seeing a very, very low interest rate environment, and clients are looking to leverage their art and jewelry for other types of investment opportunities or other types of liquidity opportunities. There's minimal fees. There's a 1% arrangement fee, and there's no credit underwriting. So we are truly looking at the asset and lending against the asset. Freya is going to talk a little bit more about the collateral, but the basic collateral tends to be jewelry and fine art that sells within the secondary market, specifically in the art space, impressionist, modern, post-war, and contemporary. I'm going to turn it back over to Freya, who's going to talk in a little bit more detail about the collateral and give some specific examples. But throughout the presentation, if anybody does have any questions about any of the slides or any of the issues we're addressing, please submit your question in the chat. Elizabeth, you want to advance to the next slide, please?
Thank you. What makes suitable collateral? So what we're looking for is generally blue chip art, meaning the type of art that you see at Sotheby's and Christie's or Phillips in their evening sales. And actually there's an evening sale happening right now. It's the Sotheby's 20th century evening sale in London. As you can see here, there's a painting from that sale which is up for sale currently. So we're looking at, relatively speaking, high value paintings because our minimum loan size is $1 million. And these are all things that we would lend against here. So to give you an example on the Picasso here, we would lend, let's say this sold for $10 million. We would lend $5 million. And we could actually pay that directly to Sotheby's to assist with the acquisition of this painting for a client. Alternatively, a client could pay for this in cash today and then come to us tomorrow and ask us to provide financing against it, and we can do that. Clients also will come to us pre-sale and ask us how much we would lend against a particular painting. And I mention that because it's very topical at the moment. This Twombly here, we would lend, this sold for, as you can see, just over $40 million. We would lend something in the region of between 15 and $18 million on this painting. that clearly is a high value painting there as well. We also lend against jewelry. So great example, last year we lent on a really beautiful Art Deco 1930s Cartier diamond necklace, which contained about 25 diamond stones. We lend against loose stones and set pieces. So we're always very happy to look at your clients' jewelry as well as their paintings. Next.
Can I ask a quick question while we're on this slide? Another question came in from the attendees. From the standpoint of the valuation, if the scope of the loan is for purchase finance, are you looking at 50% of the low estimate versus if it's an object that's already owned by the client and the client wants to collateralize an existing piece of art or jewelry, are you looking at fair market value as the baseline for determining value? Can you just explain a little bit more from the standpoint of the various protocols for the different types of financing?
Yeah, so to give you another good example, on the purchase financing, we are purchase financing against a number of lots at the Christie's evening sale in 2 evenings time. And we've actually published the lots that we will lend against. And it ranges from 40 to 50% of the low estimate. And that's partly because until you're in the sale and you see how much interest there is, that does influence how we think about the value. And also because the paintings obviously have just come up for auction. So in the worst case scenario that, let's say in 6 months' time, the client needs us to sell the painting to service the loan for them, we have to bear that in mind. Whereas if a client comes to us with a painting that they perhaps have owned for 10 years or 5 years or even 2 years, that's a slightly different value proposition for us as a lender. And yes, we do look to fair market and low auction estimate in that case. Just another observation here about suitable collateral. We typically lend against impressionist, modern and contemporary art. So that's why there aren't any sort of pictures here of old master artworks. Rubens, etc., Da Vinci, those aren't paintings that we typically lend against for a number of reasons. So it's impressionist, modern, contemporary. But as I said, if anyone ever has any inquiries from a client, don't worry about thinking about whether or not it's suitable for us, because you can just send it to us. It takes us no time at all. And we will get back to you within 24 hours and let you know if we can lend against it, and broadly speaking, how much, and you can communicate that to your client.
One more question, Freya. I was wondering, when a client has a work that they potentially think is quite appropriate and they want to get their ducks in a row and they want it to be as streamlined as possible, do you have kind of an informal checklist of what they should provide for you in terms of provenance information, title transfer, et cetera, just to make the process really smooth and clean?
Yes, I'll also just touch on this at the end, but all we need at the very first instance is a good image of the artwork, a description of the artwork, and you as the potential borrower just need to be comfortable that you can demonstrate that you own the painting. So a purchase invoice, inheritance paperwork, divorce settlement paperwork, whatever it is that gives you the legal ownership, and you can show that to us. So we do need that. And as I said, the paintings can be anywhere in the world, but we take possession in the US, in Europe, and in Asia. If we could just move on to the next slide, please. Thank you. Just coming into a bit more detail, we are looking for artworks. I'll just go to the middle image here. Again, this is the Christie's sale. I saw this piece today, actually. I went into Christie's auction house today, first time in well over a year. It was very exciting. And saw this beautiful Calder mobile, but it's very, very fragile. So, and it's made of glass, quite unusually. So what we're looking for when we're lending against something is ideally something that isn't extremely fragile, breakable, and is something that can be stored in a very sophisticated warehouse, a specialist warehouse, but nonetheless, preferably something that isn't too fragile. The size of the artworks can be important as well. So we tend to like lending against paintings that are not too huge, because generally that has quite a limited market if they're really big paintings. And we've had some fantastic examples of beautiful artworks that are incredibly important, incredibly valuable, but there might only be 2 museums in the world that can buy that painting because it's so big. This Damien Hirst here at the top, the spot painting, this is a very big painting. It's 5 meters, over 5 meters by 3 meters. So I have lent, in fact, I've got a Damien spot painting today that I have as a piece of collateral. It's a fantastic painting, but it's a lot smaller than this, and it's the sort of 1 meter by 1 meter painting. Then just the third image here. This artist is an artist that is really come to the auction market quite recently. A very current trend in seeing this artist for sale in auctions today. In fact, again, there's a couple of paintings coming up on Wednesday at Christie's by this artist. You can see here these low estimates, yet the painting sold for nearly $1 million. And those artists that are still quite fresh to the auction market aren't ideal collateral for us, and we tend to wait a couple of years until they've really established their market, their secondary market in the auction market. But as I said, this is just a bit of colour and interest for any of you who are interested in the detail. But we can look at anything you send us and assess very quickly if it's suitable collateral and how much we can lend. So please don't ever hesitate to just send us anything on your desk.
Freya, going back to jewelry and that checklist, you mentioned, proof of title. For jewelry, can you give a little bit of your quick checklist for jewelry?
Yeah, I mean, the critical thing is certification. So typically it's a GIA certificate, which is in the jewelry world is kind of the gold standard for authentication of the stone. What is the stone? What's the grading in the stone, the color of the stone? So we need that certificate. And I should say for all of the artworks, we need to view them. And sometimes stones actually, even more so than paintings, you need to view them before you can pin down a value. But in that case, we'll give a range to a client who comes to us today. We'll give them a range by the end of today or tomorrow of how much we can lend subject to viewing. Yeah.
One last question. Could you differentiate, because I know we speak languages that a lot of our clients don't understand. So can you differentiate what is the primary market and what is the secondary market?
Yes, thank you. So the primary market is where an artist has produced a painting and it is sold for the first time, typically by their dealer, the dealer that represents that artist. So those are often very difficult paintings to access for good leading artists. But that's the primary market. The secondary market is when a painting is sold for the second or further times, often at auction. We look to the auction market, as I know, lots of lenders on this call will appreciate. We look to the auction market very frequently in my business, because as a lender, the first port of call really for you, if you have to sell a painting, is auction. So that's why there is quite an emphasis for us on the auction market. The art market, as many people here will know, is roughly, actually, in terms of trading volumes, 50% auction, 50% private. So we do lend against artists that do have a strong private market, maybe not such a strong auction market, but they still need to have that auction market or secondary market, as I was referring to it earlier.
Thank you.
Thank you. Elizabeth, can we move slides, please? Borrower types and rationales. So there's really two points here. Who are our borrowers and what do they do with the financing? Why do they use this? You can see there's a huge range of borrower types. Individuals, we can lend to individuals in their personal capacity. They may hold the artwork in structures, of course, very common. Maybe trusts, it may be offshore SPVs, that's absolutely fine. Lending to estates, including artist estates, but anybody's estate. And of course, lending to the art trade, galleries, dealers, and occasionally auction houses. So it's a huge range of our borrowers. And it's essentially the whole range of anybody that owns high value artwork or jewelry. What do they do with this financing? It can range from a basic premise of wanting to release capital and do something else with it. So valuable investment capital, releasing that valuable investment capital from their high value paintings and putting it to work in something else. That might be real estate. It might be other investment opportunities, financial investment opportunities. We've had clients, as I said, buying property, investing in other businesses, setting up their own funds, seeding their own investment funds. On the flip side of that, it might be somebody that needs an immediate capital injection, immediate liquidity. And again, that might have a financial context. So beginning of the pandemic, we saw a lot of clients inquiring how fast we could fund them some capital against their collection to pay margin calls. So of course, margin calls, that can happen quite quickly and you can need some quick liquidity. And the speed of which we can provide financing is something that clients really value. It can be as quick as, it can actually be quick as a couple of days, generally is a couple of weeks. And that kind of speed of financing when people have a liquidity need is important for some clients. Paying tax bills. Of course, in the States, there's a huge range of tax bills that are required to be paid. We had a great new client actually recently who phoned up on their accountant phoned us on Thursday, 2 weeks ago, and we funded a loan to pay a tax bill that was due the immediately following Monday. So we had like 2-3 business days to fund this loan. New client based in LA. And we did that. I'm not sure why the accountant waited until Thursday when he knew the tax bill was due on Monday, but it was the first time we'd worked with them. So we were really pleased to do that. So paying tax bills is a pretty common one for us. Paying legal fees, we see that commonly, particularly with estates or trustees, where big legal fees have accumulated. And often actually the lawyers will contact us or the trustees, and we provide financing to help support the payment of those fees. And then dealers and galleries.
Can I just ask a question about? Can I just ask you a quick question about divorce settlements? Can you just share with the attendees why it might be more beneficial to borrow against the collection versus selling the collection for equitable distribution? Because that's something we do see time and time. And why would it be more beneficial?
Yeah, and actually, Colleen, you may have some other examples of this yourself, so please jump in. We often see that sometimes clients, the timing of the settlement isn't optimal for the sale, for whether that's being tax driven or art market driven. So, if people need to agree a divorce settlement, they can't necessarily sort of work with the timing parameters of selling the artwork to the optimal capacity or simply tax planning. And often there may be a disagreement which can go on for some time around who's gonna own which paintings, and which paintings are going to be sold. And if actually one party in the divorce settlement just wants and needs some immediate liquidity, the couple can just take out a loan initially work through all of these issues, including paying, of course, legal fees, unfortunately. And this can just give people some breathing room to really work out, what do they want to do? How do they want to divide the collection or sell some of it?
One more thing, which I think is really important to keep in mind, is that in the United States, we pay capital gains on the sale of our artwork. So as valuers, from the valuation kind of division of our company, when we evaluate a client's art collection, we may see some pieces have gone up in value and some pieces have gone down in value and some have stayed the same. What I think is particularly important in terms of a rationale is figuring out a way to create some liquidity for something that has gone up in value. Because as you know, if you sold it, you would pay capital gains on it. So that seems to be, I've seen that to be quite an interesting reasoning for taking some liquidity out. Have you seen that too, Freya?
Yes, we do see that. I think certainly in Europe, it's perhaps less common than in the US. But yeah, we do see that. And then, yeah, just lastly, I think I was just touching on the galleries and dealers. Of course, galleries and dealers often have a huge inventory of extremely valuable paintings. That gives them an opportunity to use that stock, as they call it, for working capital. So we can provide, in fact, I'm working with a new gallery. Well, he's actually, the gallery's been around for a very long time, but it's a new client of ours. And we're working with him at the moment to do just that. Some very important paintings that they are holding as stock, and we're providing additional working capital, actually alongside a traditional banking facility. So, the two can often go, we often see them going hand in hand, both with our private clients and with our galleries and our dealers. This is just an additional form of financing that can sit alongside a more traditional financing.
One more question. If a client takes out a loan on artwork, but then would like to sell it during the lifetime of the loan, can you opine on that, please?
Yes, we work with clients very frequently to facilitate that. And that is one very important reason why a lot of clients choose to work with us, as opposed to one or other of the very limited other art secured lenders that are out there. Art is our business, clearly. And we have this fantastic team that if required, we can help support the client actually sell their painting. And it's a lot easier working with a lender who understands art, who can actually facilitate that sale and work with the client to achieve the best outcome for that sale. And they're also your lender. That is a very happy marriage, and it can really work in a very practical way to help the client sell the painting. Even if the client has an art advisor, and they don't need to use us, that's absolutely fine. And the difference between us and I'll just use one of the auction houses as an example. If a client wants to sell the painting and they're using let's say Sotheby's as their finance provider, they have to sell the painting with Sotheby's, and that is a real restriction for many collectors that is not appealing.
I imagine the other reasoning for wanting to use a firm that isn't specifically in the business of selling is privacy around their collections.
That's right. So if a client comes to us looking for an art loan, that information stays with a very limited number of people. We're not one of the big international auction houses, so we don't have any of those conflict of interest, and we don't have the interest in sharing that information widely across the whole business. So yes, it's very discreet, it's very confidential. And also one advantage is, we don't have to use the UCC filing. We have clients that take their paintings from the US, they ship them either to London or to Switzerland, and they do the loan with the paintings in Switzerland because it is entirely private. It does not go on the UCC filing. And that is attractive.
So I'm backtracking a bit because this is a question from the audience, but I just want to confirm it because you gave a great example, but I had Matthew Wong in my mind as well. So the question was, of course, seeing the market climb so significantly for Wong. On the one hand, it's a very small supply as he died at a very young age, but on the other hand, again, it's just this huge climb in value. What would your thoughts be if someone came to you with a Matthew Wong in terms of a loan?
Yeah, and obviously I think we've got two Matthew Wong images here in our materials, so top marks for people identifying that. We would lend against Matthew Wong. We may be more conservative in terms of our valuation approach than some of the recent numbers that have been achieved at sale, because they have been really impressive sale numbers that have been achieved, but we as a lender just have to be a little bit more cautious. So we would probably be quite conservative relative to some of the really impressive auction numbers that have been achieved at the moment.
Certainly, but certainly if they wanted to take a loan out against it and then sell it during the lifetime of the loan,
yeah, no
that
problem.
could certainly be done and pay off very easily, I imagine.
No problem. Yeah, we would be delighted to look at Matthew Wong if anybody has any.
And the last question, just because we're backtracking, I just want to make sure we answer it. The choices for loan terms. So what's your max and what's your minimum?
Yeah, so our minimum is typically 12 months and our maximum initial loan is 2 months. However, every single borrower over the last 5 years who has requested a loan extension, who has not been in default, they have been granted a loan extension. So our longest loan on our book currently is about 5 years. So it's good business for everyone. If you have a performing loan, there's no reason why we won't extend it. So yes, it's short-term initial financing, but they do roll. Those loans do roll.
There's one more question, but I think you're going to talk about it when you talk about process, but there's a question, if you could talk about how the Fine Art Group funds the loans that you make, as in the Fine Art Group is actually the lender.
Yes, we are the lender. We are not a broker. We have a private credit fund, and it's private capital. That is how we fund our loans. So we underwrite the loans in-house. The whole execution process, including funding, is taken care of in-house by our team in-house. And that also ensures a very tight control on client service. That is something we as a business across, and I know Anita's team and everyone here has exactly the same ethos around this, absolute white glove client service. So, we can absolutely ensure that we look after your client because we are doing everything in-house ourselves. Next slide, perhaps. Yeah, just 2 case studies here. I've talked about a few case studies as we've gone through. A purchase financing loan that we provided to a Texan-based collector quite recently. This was to buy another Basquiat. We see Basquiat, obviously Basquiat, Richter, Picasso. These are all artists that we lend against very frequently. So this is another good example. This is a purchase finance loan. So again, we put up the purchase price, 50% of the purchase price, to allow the collector to, and when I say allow the collector could afford to buy this in cash themselves, but they didn't want to put all of that cash into this acquisition. They wanted to retain some liquidity and simply not put all of their investment capital into this particular painting, or even actually probably wasn't even 20% of their investment capital into this painting. But they just wanted to use some leverage to support the acquisition and really maximize their financial planning. We funded this very quickly. It was in about 2 weeks. The painting was stored in New York. The acquisition actually took place essentially at the storage facility, as is often the case. And the painting was transferred into the lender's account in the storage facility on closing. So it's a really simple transaction for the client, that one. A pre-tax loan for an American estate. So this is a good example of where the Fine Art Group works with collectors in multiple ways. We would often, for example, have a valuation in this context for tax purposes. Then we would provide a loan, and at the same time we might also advise the client on the sales strategy. And all those three services being provided by the same group allows for a very integrated full product service to the client through, as I said, from valuation, financing through to sale. So we provided some financing to the estate here against a fantastic impressionist and modern collection. Many paintings in this collection. There are about 60 paintings in this collection, and we actually did this loan in we did it in about 2 weeks. 6 weeks. This loan. So sometimes you'll lend against a single painting, and sometimes it will be a very big collection, and we can handle either of those cases. And in this case, yeah, we help the client to sell the collection in the best way. So we proposed a liquidation strategy essentially for the estate to optimize the sale proceeds.
And Freya, if the client had both art and jewelry, you could take a hybrid approach and lend against both types
absolutely.
of collateral.
Absolutely.
Okay.
Yeah. Next slide, please. We've talked a bit about the process, but the process, as I said, very simply, the very first stage is just to show us what the proposed collateral is. So a good image, a description of the artwork, and we will come back within sort of 24 hours and confirm whether or not we can lend against these particular paintings, or if we should look at something else, and how much we can lend against it. If there's a meeting of the minds there, we'll produce a term sheet, and it will agree and negotiate the term sheet with the client. Once that's agreed, we'll go on to the full documentation, requesting the paperwork that we talked about earlier, so the proof of title, so the invoices, etc. The insurance documentation, ensuring that obviously the artwork is insured. We do a lot of work with insurers. Clearly, throughout the whole business, insurers are really important for all of us. And we sometimes we'll insure the work in our own name. And so we give that business to our insurance partners, and other times it will be left on the client's insurance, and we will be named on the policy as a beneficiary. We take care of all of that for the client. We take care of the logistics. If something needs to be transported or something just simply needs to be repacked, we make sure that during the life of the loan, the paintings are as well looked after as is possible. So hard pack crating, stored in suitable storage facilities, etc. And we fund the loan as soon as we've done all of those stages. And as I said, it can be as quick as a couple of days or a couple of weeks. And we do everything in-house. Key trends and predictions. So we just thought we'd wrap up with some commentary that we've been involved in the press. Here's just a snippet from the Financial Times and CNBC. The press has recently been, over the last year or so, ever more interested in art finance. And why is that? And I think it's partly because the increasing sophistication of the art market and of collectors, of all of our clients in this space, has really led to an increased adoption and interest in art finance. It is part of the ever increasing sophistication of collectors and art market, and the art market using leverage, extracting valuable capital from art collections to buy more art or to do something else with it. About a third of our clients buy more art. And I think key trends and predictions is simply that we will continue to see an ever increasing use of art finance as a financial planning tool. And and it has real value as a very segregated form of financing, which supports the ever increasing sophistication of our fantastic market.
Well, you know, Freya, I mean, there's no doubt that with this, all this talk about inflation, we've definitely seen clients very focused on the acquisition of these kinds of assets, and having some liquidity to do enhanced acquisition is very, very helpful, some capital in order to acquire. So it's just kind of finding out all these strategies that can assist with helping build that part of the portfolio.
Exactly. Do we have any more?
So now's time to, if there are any other questions, this is a really good time just to put something in the chat box in terms of, you know, any additional questions you have in regards to finance. Colleen, is there any additional questions in the chat box?
I have the chat box open, so just waiting. If anybody has any questions, type away, and we're more than happy to address any questions you have about art finance process, the market, collateral, terms. We'll wait a minute to see if anybody else has any questions.
Excellent. There was one question that I saw that it's an interesting question, and it's related specifically to something you said, Freya. I'm going to read it, and then we'll kind of dissect it. So the question was about money creation in relation to the purchase loan. So the question is, what are the consequences for the market and the different actors, auction houses, collectors, advisors, brokers, when a painting's purchased with a loan backup and sold a few years later for a higher price? That's the question that they ask. I mean, I have my own thoughts, but what are your thoughts, Freya?
I think I have two answers, really. One is, it has no impact, negative or positive, to the art market, because there is no difference to art, other than the person that's obviously buying the painting and selling it, because it might give them an opportunity that they wouldn't otherwise have. But if we look at the whole market, is leverage in art having an impact in the whole market? Yes, it might encourage more buying, more bidding, but is it fundamentally changing the value of paintings? No, I don't think it is. Is it fundamentally changing the structure of the market? No, I don't think it is. If you look at our type of clients, actually the majority of my clients are incredibly successful entrepreneurs, and they just think of leverage. They lever, you know, pretty much across all of their asset base, and they just see it as another financial tool, but it doesn't fundamentally change the art market and the value of a particular artist, or it doesn't create a kind of bubble or a heated market, is my view.
And I would say that, you know, if we had this question 20 years ago, it would be a very different kind of conversation, because artwork wasn't really seen as an essential part of the portfolio, the overall portfolio of assets, and liquid and non-liquid assets in a client's portfolio. But today, all of these different strategies are just part of the management of your portfolio, and no different. And today, you know, these assets are seen as very significant and very important. I mean, there have been lots and lots of analysis, Deloitte, et cetera, that have said that, you know, this part of the portfolio is somewhere between 10 and 15% of an ultra high net worth client's entire portfolio. So the art has become significant along with those other collectibles. So these strategies are the norm, not the exception when we're looking at them as assets.
Frey, there is one more question. Are there any geographic restrictions for financing?
Yeah, good question. Thank you for that. Our borrowers can come from anywhere in the world. We have borrowers today from about 22 jurisdictions. And simply the only qualification for a borrower is, do they pass the required anti-money laundering, know your customer checks, which is exactly the same checks that you have to do if you open a bank account or if you buy a property. So it's no different. So that's kind of a given. the only other thing is you got to own the right paintings, the right collateral. So there are no countries that we won't lend. That there are no sort of countries where we won't lend to people because they come from a particular country. The other geographical limitation is just, where does the painting need to be during the course of the loan? And as I said, that's in the US. We've had a client, for example, in Brazil. 2 years ago, his paintings were in his house in Brazil. He shipped them to New York, and they're in storage in New York, and we've lent to him against his paintings in New York. And it worked out great for him because he actually wanted a bank account in New York at the same time for other business reasons. So it all worked very well. Yeah.
Perfect. Thank you. Anything else?
I don't see any other questions, Anita.
So we are recording this presentation, and following the presentation, we will make it accessible to everyone. We want to thank everyone for joining this webinar. And if you have any questions specifically about financing, Freya Stewart's contact information is here. And then if you have any other questions about any of the other services of the firm, I'm always available, and so is Colleen. So thank you all for attending, and have a wonderful day.